Number one is your unit level economics. It's always the basics, right? Number two is figuring out like what is the evolution of that strategy. And then number three is like your execution, right? You've always got to enhance your execution. That's where I was like, I've got to take this business and stop thinking like, oh, I'm going to invest in a bunch of properties and I've got to create a real business plan. But then how do I treat it and operate it like an institutional portfolio? Well, I've got to create the foundational governance and structure.
What's up, everybody? Welcome back to another episode of the STR Investing Podcast. I am super excited about this week's guest. We have tried back and forth for probably a couple of weeks, maybe a month now. I missed him, he missed me. We're finally on the pod. We're going to talk all things short-term rentals, and our guest today is George Salas. George, say hi to everybody.
What's up, everybody, man? First of all, Mark, I know we've been trying for the last few weeks, so thanks for having me here, man. Appreciate you and excited to bring value to your audience here, man.
Yeah, dude. And I don't know if there's anybody in the space more equipped to talk about this than you are. For people who don't know you, they should definitely follow you on social media. You do a lot of really cool stuff. I'll put your links in the show notes. But George is with Empress Capital. They have a fund. They buy a bunch of short-term rentals. They do really cool, unique properties. I'll let you dive into that a little bit more, but just to set the stage for people of what you guys are doing, you've got a lot of experience in the space. You guys do property management, all kinds of cool stuff. And so I'd love to just get a little backstory on you. Would you just tell people like who you are, where you're from, and how the heck you ended up in the short-term rental space? Because I don't think many kids grow up thinking, I can't wait to get into the buying Airbnbs.
Right. So I'm a kid from Peru, man. I was born and raised in a very small town in Peru. Grew up in an adobe house, and at age 9, I moved here. But before I even moved, I lived in half of a house, actually. So it had collapsed because it was adobe, and we were very, very poor. So I moved here at the age of 15. So it's been a long journey, man. Coming here without really speaking English and really not knowing the culture here. It's been a big change. At about 23 is when I entered hospitality. I went into bartending, waiting tables, managing restaurants, and that was my door into this world. And then for 10 years, in addition to this additional 4 years of restaurant industry, I built sort of a solopreneur company on the marketing, service, bar industry space. So I had a production, so I produced over 1,000 events. My largest one was 3,000 people. So from 2007 to 2017, I was producing events, marketing events, hosting events all throughout Houston. So from there, I got tired, man. I really wanted something more meaningful. I got into investing into an actual nightclub event venue, $300,000 out of my own pocket. And as an LP and an educated investor, I was just doing great in that business, but I was uneducated when it came to investing, when it came to, limited partnerships and funds and all that. So I went in and I ended up losing everything. So I invested all this money, right? And then I walked out of there with not even one penny to my name. So I walked away from an industry that I was already tired of, right? I wanted something bigger and better. So I said, real estate has to be it. At that age, I was like 32, 33 when I was done. This is 2017, right? To 2026. So almost 10 years ago. So and it was, for me, it was just a big change. Hey, I've got to do something better, right? I just lost my butt off. I've got to get somewhere. So real estate started with me having $5,000 in my pocket, really, and just figuring out like what's that route in real estate, right? I was diving into flips at first, fixing and flipping, residential homes here in Houston, and then wholesaling real estate, and then, man, I remember clearly April of 2017, I found out that you could rent a property and then sublease it on Airbnb. So my journey started with rental arbitrage. And all of you guys out there know how that is, renting and really not having even the cash to put into your investments, but not knowing anything. So I dove really deep. And by the end of that year, which 2018 is when I really went deep, I had 20 short-term rental doors. I was doing like 5 or 6 rent rehabs at the same time. I wholesale like 10 plus properties that year. So my first year was just me working 15-hour days and not really resting much, right? I was overdoing myself, and my health got affected a year later is when I started really, hit my health, but I also lived on $20,000 in 2018 and 2019, 20,000 to pay all my bills. Today, you can't even pay for a car with that, right? So, and that was the journey, man. And COVID hit us. I had 40 doors, so that was kind of a little of a setback for us also. Then after COVID, everybody had a great year, right? 2021 was a fantastic year for the short-term rental industry, and for me, I hit our first seven-figure year in our business, and then it just grew from there. We ended up launching our fund a couple years later, 2024, and dove into really figuring out what raising capital was and really creating these types of partnerships. So today, we're doing great, man. We're building a much bigger enterprise than a fund, right? So we're building Empress Hospitality Group as a vertically integrated hospitality investment and operating company. So we have a holding company and two engines. So Empress Capital, right, which is what I market out there, is our investment and asset management arm. And Empress Hospitality Management is the operations, the design, everything we see also on the beauty side of our short-term rental industry, right? The fund for us is one vehicle, and being in a world, coming into groups with amazing people and part of a lot of masterminds. So the people I surround myself with, like you, right? Getting to know you through STR, Cribs, and the industry itself has been great as well.
There's a lot to unpack there. Thank you for sharing your story with us. It's super interesting. I didn't know any of this stuff. And so I knew a little bit about what you guys have been up to, but it's really interesting to hear your background. I want to unpack a little bit. So I want to jump back a little bit and ask about just what it was like. Because I'm sure a lot of people listening are thinking about this, man. What was it like being a 15-year-old kid who didn't speak English, moving to the United States of America and probably going to high school and being immersed in this brand new culture? Like, what was that like?
I didn't speak English. I was shy, but I always knew something. I always had that drive. So going into school, not know anything, it was just different worlds. I was not myself, because you're moving to a different world and you've already passed that age where you learn what it was like living in another country. So you're learning a completely new, different culture. It's not like coming to the US at 5 when you really don't understand or know much, right? I had to change the way that I saw the world. And the biggest thing that I remember when I came here was, it was just, everything was just larger, different. The culture here, the mindset of people, like you could do whatever you want, in America, right? You could set yourself goals. So one of my largest goals when I was growing up, my biggest goals was being a professional soccer player, right? So I went all in, and then I realized that it cost a lot of money. So I was out there, just grinding at that age and just really learning the world. So I was kind of a late bloomer when it came to realizing my goals, but I was still driving 100 miles per hour without the proper map, right? You understand? So not having the right education and mentorship, at that young age. My parents divorced when I was, when I was 6 years old. So never really had that in guidance there. So that's the one thing I never lost, the drive. But throughout the years, I learned that it's all about learning and growth, right? So no matter where you are in life, that's pretty much the story there, man.
Dude, that's crazy, man. I didn't even plan this, but I'm wearing my America 250 birthday, and I
yeah, baby. Happy birthday, USA.
I know, dude. There were just a week or so, 2 weeks past the 4th of July here, and you are absolutely right, man. It is a land of opportunity, and you could pretty much be anything you want to be with enough drive, determination, skill, connections, things like that. And so I love that for you. Do you feel like that experience 20 years later, 15 years later, however old you were when you got into the short-term rental industry, was a helpful tool and skill where you were like, okay, I was able to move to a new country where I didn't even speak the language, and I was able to adapt and learn and grow quickly and blend in. Do you feel like that skill set is something that translated really well to the short-term rental industry? Because I feel like the STR space is super unique. and you've got to be able to adapt constantly to new problems, new changes, things like that.
Yeah, so I would say coming here, it's sort of a slow ramp up, right? You come to a new country and then really just figuring out the world. So it took me a few years. I would say until maybe I was the end of high school, right? So 4 or 5 years into, being here was when I really started realizing I could do better, I could do more. And then what really kicked off was being in the service industry, where I was getting to know what other people were doing, right? And then the next level of that, it's really joining, high level groups. But the clarity on what you could do, what I could do, was when I started that service industry journey. When I started my marketing company, and really I was getting to know different groups and understanding people. So I've got over 10,000 contacts in my phone still to this day, So I have dealt with probably tens of thousands of people on a direct one-on-one basis over the last 15 years.
I love that, man. I've always felt that your connections and your personal brand is super important to be successful in business, and being able to pick up the phone and call somebody that can help you solve a problem is one of the most valuable things you can have in any industry. And so I know you're super well connected, man. I've known that for a long time, and it's cool to hear your story. Let's talk about the arbitrage, because arbitrage is one of those things that got really, really hot for a handful of years, and then post-COVID has definitely, I think it still works. I don't know. I'm not in that space, but I know that it's I don't see as many people pitching it. And so when you got into arbitrage, what are some of the things that you learned? And you said you were working 15 hours a day, man. Did you get burned out pretty quick? Because you were probably doing everything, right? You were property management, you were setting them up, you were cleaning them, you were doing all of it.
Except for the cleaning. So I would only clean when cleaners called in. So that was very seldomly. But yes, to answer that question, I was doing everything. And on top of managing these 20 rentals, right? I was also renovating several properties and wholesaling real estate. So that's where the 15 hours a day came in. But going back to the arbitrage piece, I think some of the things have always been key is it's just really finding, at that time, it was about finding the right properties, because I didn't really know market research, right? I didn't know understanding your demand and markets. I studied rental arbitrage, and that was just about the apartment model, right? And it was the negotiation piece, the location, not really the market, right? More the location. So our first 10, 15 properties were in downtown Houston. So that's one of the things. But then everything evolves, Mark, right? So from there, I think things got a little bit old when the COVID wave hit, but also at the same time when the market started really maturing, right? So the maturity started after COVID, 2021, when the market really started maturing, because our supply went from, call it 1 million listings to about 1.5 million by the end of 23, right? Or at the end of 22. So that's a whole different strategy, and you have to pivot so you can survive and then try to thrive again. So I learned to adapt very quickly. When I was doing arbitrage, I learned that you couldn't really do and add the value that you really need to outlast, even your leases, right? But if you want to have a business plan of 5 years for a portfolio of rental arbitrage properties, it's much more difficult to outlast a 5-year business plan, because changes are occurring in this industry so quickly, right? And not just on the technology side, but also supply is doubling every 5 to 7 years in most major markets today, right? So yeah, those are some of the things, and I would say just having a team, since I learned everything in this business, from everything, from doing your property management to even cleaning and your revenue management, pricing, and really the back end operations side of things. So we are a true operator. I am a true operator from day one. So yeah, man.
That's awesome. Yeah, and that's really what separates you guys, what you guys are doing at Empress Capital. We'll dive into that. But I would say that it's your experience where you went through and did all the stuff. And so as people who, a lot of people that are listening to this podcast are individual investors, and they're buying their first, second, or fifth short-term rental. That's the vast majority of our demographic. And a lot of them have W-2 jobs, and they're not going to be the one to work 15 hours a day in this business. And so what kind of advice do you have for them where, yes, there's a huge benefit to being able to be like, yep, I have walked the property, I've cleaned it, I've done this, I do the revenue management, because you learn so much by doing that you can speak the language. But we have a lot of people that don't have the ability to do that, or they're doing something else with their time. And so do you have any tips and tricks on how people can still get a little bit of firsthand experience, or things that you've learned from just doing it, where a lot of people maybe can't do it? And so today they're listening in, they're like, gosh, George, what did you learn that you can share with me from doing those 20 units 15 hours a day?
Well, the first thing is always build your who, not how, right? So try to figure out what are those lower value activities, and it starts outsourcing them. But at the same time, as you grow financially, you can start losing, right? So from day one of my biggest, not maybe say regret, but one of the things I should have done is learn the finance side, right? Meaning, what is my monthly profitability? What's the ratio of my cleaning expenses versus my revenue, where it needs to be, maybe we run around 10 to 12%, right? But others run 15, 20%, right? What's your expense ratio, right? So little things like that. And that starts with a great bookkeeper. So I learned my lesson because I did not have a great bookkeeper, right? An accounting team, someone that not just does your books and categorizes them, but understands short-term rentals. There are companies today that do, right? We use, different teams. We also have an in-house person, but understanding the finance and your profitability on a month-to-month basis, and then knowing your numbers before you even start or launch, right? So that is, that's a must, but I didn't do that. I was spending $5,000 per listing, right, to get these apartments launched, and I was just going at it. And I was making $500 a month cash flow. Okay, but today people are spending, including us, right, $200,000, $300,000, $400,000 a listing. So you have to step up and understanding market, having your numbers. And then really understanding your operational profitability are those major things that I didn't do. I wish I would have done because I didn't know when I was losing or not, right? Now, the other thing is knowing your unit level economics, right? So if you can build a model that you understand every little nuance on your profit and loss, we call it unit level economics. It's one property, right, with your revenue and expenses and what is that average profitability and what's that little line item. That is unit level economics. To me, that is probably the most important thing today in this market, because those, with the short-term rental industry changing so much, can overnight change, and you can go from a profitable year to a negative year in a matter of 1 year because of whatever reason. So you got to understand the unit level economics, and that starts with that bookkeeping and accounting team, but also tracking all that operationally.
Yeah, I love it, man. It's if you gave us no more advice in this entire call, everybody should rewind, listen to the last 3 or 4 minutes, because that's huge. And I do think that a lot of us, like you did, and like I've done plenty of times in my life, you just kind of jump in and you're just like, all right, I'm going to figure this out. I'm diving in with both feet. And then you look up and realize, holy, I just worked 15 hours a day and I made $500 cash flow last month because I'm not tracking my expenses. I'm not sure if these numbers make sense, if they work. And so a lot of people probably think of it as working the deal backwards, but you should come into the deal with all of your economics figured out. Your total cost of ownership, your total cost per clean, your total cost for supplies, your taxes, all the stuff, your electricity. You got to have all that stuff dialed in, and then figure out what's left to make sure that you're in a profitable endeavor. And like I said, tracking it constantly is important. How do you guys look at that? Are you looking at statements on a monthly basis of properties? Are you making decisions in real time? How do you think about that as the industry changes pretty rapidly? Like you said, 1 year could completely change everything. How do you guys monitor that, especially now that you own a whole lot of properties?
Love it. Great question, man, Mark. So today we use a pro forma target a pro forma realistic number, and then we reverse engineer from there, break down, call it 150,000. We break it down per month, and then we add the seasonality component into that. So now, out of 150,000, it's not just about understanding that I need to make 12,500 per month, in revenue, right? Or whatever 150, yeah, that would be it, 150,000 divided by 12, So it's more understanding how the season is going to change and what months are you going to be negative, what months are you going to be positive, right? So we do that. We create a target, we create an actual, right? And then we reverse it from there. We track it with a software that connects to our PMS, that has a QuickBooks in there, right? And then we look at that software, download the data, which is actually automatically, API to our dashboard, right? And in that dashboard, that dashboard tracks the revenue, and it tracks the expenses. So we've gotten it to a point that we're doing that now, almost automatic, and that's with help of great people and AI, of course.
Of course. So, and you guys are doing that monthly, weekly, every other month? Is it real time? Is it always updating every day? Do you look at a dashboard every day?
It's updating once the owner statements come out, right? So we're looking at, let's just say, our top line revenue every couple weeks. We know that if we're not hitting percentage, our target, if we're not hitting our target, it's because of that revenue, right? Then expenses are going to vary month to month, but we're looking at it and uploading it monthly and then converting it into a quarterly so that the quarterly statements can go out.
Totally makes sense. So then another kind of question around finances, and this will probably be different for everyone and different for you on different properties and with different partners, but how do you think about taking out money from the business, your cash flow, with seasonality, right? We've got a property that last month made a whole heck of a lot of money, and this month it's going to make a whole heck of a lot of money, but in December and January, it's going to lose money. And so how do you think about that, where short-term rentals are unlike many other real estate assets, that they have huge fluctuations based upon the busy season?
Love that. Great question. We talked prior to getting on the call, like, let's go deep, baby. Let's go deep. So thank you for that. So I like to essentially generate the cash flow. The property management software sends the payouts to the owners on a monthly basis to the owner entities, right? So let's call it the fund is one owner entity. So it's sending, X amount of payouts. And then in that bank account for that property, we have a property bank account for each property. We essentially keep 3 to 6 months worth of, depending on how seasonality is in that market, of operating expenses that include our expenses and our mortgage. So we want to have at least that. And then anything above that, we can distribute. So for example, our St. Louis portfolio in St. Louis is a very non-seasonal. So you've got 43% occupancy in the winter and like 57 or 60% occupancy in the summer. So there's not variance between low and high seasons. So it's very seasonal. So you don't need to have 6 months of operating costs, right? Maybe you need to have 2 or 3. 3 is always the rule for us. So we think in terms of having enough cash flow to pay for at least 3 to 6 months of expenses.
Cool. Makes total sense. And then if you've got a property in a beach market where it's going to be very seasonal, then you might hang on to a little bit more operating cash for 6 months because you know that it's going to be a whole lot more seasonal. So cool, man. Let's dive into what you guys are doing, man. I know we've danced around it a lot, and people are like, well, what is Empress Capital? Will you just kind of explain to us exactly what you guys do and what you're up to every day these days?
Absolutely. So as I mentioned earlier briefly, we have a parent holding company. So it hasn't been always this way, Mark. It is a progression. So we're finally getting to the final points of forming the holding company. Empress Hospitality Group is the holding company, right? So we are building a vertically integrated hospitality investment and operations company. So that's through 2 businesses, right? Business 1 is Empress Capital, which handles the asset management, the investment side, the underwriting, the renovations, the CapEx management, right? And then the strategy and the vision, right? So, and then we have Empress Hospitality Management, which essentially handles all the operations as soon as we are closed. Two arms. Now the holding company is the strategic arm, right? It owns the IP, it owns the brand, it really focuses on the governance, the docs, and it's really creating the whole structure, right? So, and we have one fund, right? It's a $10 million fund with up to availability to do 15, and we have we're actually purchasing an 18 property portfolio in there. We've acquired 6 of the 18 so far, right? And that's just one vehicle, right? So then we are also acquiring a boutique hotel right now in Texas. So we're on the LOI right now, so performing due diligence. And then the broad goal is for the platform to acquire boutique hotels, micro resorts, hospitality portfolios, and then at some point, at operating businesses, and then the operating company, right, the hospitality management company, manage all those assets and really look at the performance. Now, I'm on the top, right, on the whole side, working on the strategy. Part of our Empress Capital team, we have an operations COO and somebody on the underwriting side, finance team, tax strategists, the whole 9 yards, right? So we're building a vertically integrated hospitality company, and our goal is to change the industry and change how experiential short-term rentals, like where the market is. That's where I'm seeing it, right? To change this industry for good.
Yeah, I love that, man. I want to ask you about like the actual assets themselves, because what I think is so interesting about what you do is we've seen other funds and we've seen other people buy a lot of short-term rentals, but I've never really seen anybody who buys the unique properties or goes after the really unique places that you do. And so what was your mindset around that? Did that evolve over time? Were those just the opportunities that were given to you? Because you're not buying normal houses. Like, you're buying super properties. Like you said, you're buying boutique hotels, you're buying micro resorts. Was that the strategy all along, or how did that come about?
It was not the strategy all along. It evolved from renting apartments to turning our fix and flips into short-term rentals, right, for a few years. Then realizing that really we needed to add pools, and then doing pool properties, so buying pool properties and just putting furniture in them that they performed better. And then the next level of that was doing these pool properties, but really adding unique design. And and the next level of that was doing the same plus, adding larger amenities, right? And then doing the pickleball courts and doing just the top of the market things, that most professional operators are doing. But then what really clicked for me was, it was on the finance side. I was looking at the numbers. I've been looking over the years to the numbers, and I started realizing that the higher cash flow numbers are in the mid-market properties that you're turning into experiential properties. They're not in the $1, $2, $3 million. I mean, you can make great money on $1 to $3 million properties if you structure them right, but it's a little riskier. So where we mitigated our risk was going after mid-market properties at that point, right? So we went after mid-market properties. This is $500,000 to $750,000 value, and then adding that 20-25% of that total cost and amenities, and maybe doing renovations and making them look really nice, and then experiential, right? So that was the value add and the transition. So it's been an evolution every year, Mark. So it's never like, oh, I'm going to build this empire from day one. It's more like, we're doing this works, but I think this might be better. Let's test that. So we did that worked. Let's do a little bit more. So you as a person, everybody listening out there, is when you're building something, you always have to think of like, what is that 10x level of what I'm doing, right? Which is honing in, separating your 80% from your 20%. And what that means is most of our revenue and most of the things and the money and the success we have comes from about 20% of the things that we do. So I look at that 20% and I focus on that. That's my 10x move, right? And looking at this larger portfolio, over time, you can tell which properties are the 20%. So you start focusing on those, and then you push the needle a little bit bigger than that, right? And it's an evolution. It's never, hey, let's go build $100 million portfolio, right? Until you really have it, most of it figured out. I'll never say all figured out, right? So you always have to evolve and grow. So going into the boutique hotel industry, for example, Mark, it's a whole nother game. But what are we doing? We are getting a boutique hotel with a villa that has a waterfront pool, right? A waterfront villa with the waterfront pool. It has a lodge, and it has, you know, these casitas, which are all single short-term rentals in just one building on the water. So that's an evolution from doing one property into a 30-door, right? And it's pretty much the same thing. We operate them the same. You just bring that 20% of what we've been doing in the single-family portfolio and apply that to this new strategy, or just another arm, right? Because it's the same strategy. It's still an experiential short-term rental.
I love that. Okay, that leads us into the future, which is you guys have learned over time, like you said, it's the 80-20 rule. What's working? Oh, pools are better. Okay, we need pool properties. Oh, now we need better design. Oh, now we need to think about the resort. Oh, now so you're evolving your buy box, you're evolving what you're investing in, what you're spending your time on to find the most profitable and the best returns. Give it a couple of years. What's it going to look like in a few years? Are we doing Airbnbs to the moon? Like, I mean, where do you think it goes from here, and where does it go from here for you guys?
Well, the 10-year vision is essentially building enterprise value and having a larger exit, right? So 10 years, enterprise value, building a company, right, that has, you know, you could sell for $100 million, right? And that is broken down into, right, number one is your unit level economics. It's always the basics, right? Number two is figuring out, like, what is the evolution of that strategy. And then number three is like your execution, right? You've always got to enhance your execution. That's where I was like, I've got to take this business and stop thinking like, oh, I'm going to invest in a bunch of properties and I've got to create a real business plan. But then how do I treat it and operate it like an institutional portfolio? Well, I've got to create the foundational governance and structure, right? So for us is not just building that large portfolio and having that exit, but creating a true high, enterprise value company as we're doing it. So, but now formalized into Empress Hospitality Group.
Yeah, that's really, really cool. Do you think your buy box will change? Do you think, I know it's changed and the assets you guys have invested in have changed. And I'm sure if you look back, I guess, have you done this? Do you ever look back on your units you had at arbitrage 10 or 15 years ago versus the units you have today? And do you ever just go, oh my gosh, this is totally different game?
100%. I read a book one time and I go through it every day. If you guys are out there listening and you want to actually really understand what's the big gain that you've had, read this book or listen to it on Audible. It's called The Gap and the Gain. So once I read that book about a year and a half ago, it made me realize that I was thinking about what I haven't achieved yet and then really ignoring how far I've come in the last 7 or 8 years at that time, right? So I think about the evolution all the time, brother, right? And that's what really keeps me driving, right? So you're always going to get better. But if you focus on what you haven't achieved or what you're messing up on, which is the gap, you're focusing on the gap that of the things that you haven't done or the goals you haven't met, you haven't achieved, right? I focus on what have I done since last year. So I go backwards, right? I look at the last year, I look at the last 2-3 years instead of always just looking at the future. And I know that everybody goes at their own speed, right? You just have to create your own gain and your own gap, right? You have to create your own gain mostly. So focus on what you've achieved and then just drive your path doing that. And you realize that you have achieved way more than you could think. So,
dude, thank you for the recommendation. As you're talking, I added it to my Amazon cart and I already got it on its way. So The Gap and the Gain will be my next read over the next couple of days. And I'll report back to you. How is that from the guy who wrote Who Not How?
Same guy with Dan Sullivan. And then the next level of that is 10x is easier than 2x, which gives you that that gain, right? It's that gain, that 20%. So they're all three of them were by Dr. Benjamin Hardy and Dan Sullivan. So I recommend all three of them. Best books.
I definitely will. I've got it coming, so I'll let you know. Thank you for the recommendation. I always ask for a book recommendation at the end of the pod, and you beat me to it, man. So that's awesome. And I love the mindset behind that as well. I think that, pretty much for all people, myself included, it's like you said, we're always focused on the next iteration. How can we do better? What can I improve on? You're looking at the destination. You're looking out the front window, and every once in a while, it's great to look in the rearview mirror and see where you've come, how far you've come, and kind of reflect on that, and then keep rolling. So, what's next for you guys? I know you've got a boutique hotel under contract, and you're working through that. But where do you guys keep going from here? Is it more properties? Is it better execution? What are you thinking about over the next year or two?
Number one is continuing to just build the operational side, right? Because the more that you scale your portfolio, the more properties you buy, the more operations and headaches you're going to have to deal with. So it's formalizing a larger structure for us, and then marrying both of them, because I always used to think of this just being two companies, but it was missing, that bridge over from you just looking at what we're building through the lenses of one ecosystem. So continuing to build that, acquiring obviously sweet assets, right? Well, we're doing some cool strategic moves on these portfolios, right? On the boutique hotel side as well, where we were able to sell off some of the units, get some investor capital back within 2 years, and then keep the rest, right? So and operate them. And then I would say the capital side it comes from trust, relationships, great reporting, and obviously track record, right? So for us, it's building that, to the level of what I could say, just 10xing that, looking at the 20% of what's worked when it comes to reporting and when it comes to really deploying the capital. And then turning those deployed dollars into investor returns. Like that's the focus, and that all is part of the operation and what we're looking into building and what we're building today.
I love it, man. George, thank you for coming on. I feel like we've really dived into some pretty good deep stuff. I would love to have you back on in 6 months or something. We can chat more STR stuff, see how things shook out with your boutique hotel. In the meantime, how do people connect with you, follow with you? What's the best avenues for them to do that?
I appreciate you having me. First of all, Mark, thank you for having me. I know we've been back and forth, but so great episode. My personal website is George Salas, SALAS 360.com. So that's social medias and calendar link and stuff. So thanks for having me, brother. Appreciate you.
Of course, man. I'm going to drop your link in the show notes for anyone listening. And guys, it'll take you to all of his social media channels. I follow George on LinkedIn. I love to see what they're up to. He's got a beautiful family, and you guys are always on fun, cool adventures. And I always love to see the projects you're working on too, man. So thanks for coming on. Everybody, thank you for tuning in to the STR Investing Podcast. We will catch you next Monday for a Monday Market Report, and next Friday for another guest speaker. Thanks, George.
Thanks, Mark.